Every so often, the noise of the market just fades away and a signal emerges, not from a press conference or a government report, but from the silent movement of real physical things. We're not here today to just report the news. We're here to interpret one single massive transaction, a move by some of the world's smartest corporations that signals a deep change in how power and wealth are going to be defined for the next decade. So let's decode this signal together. Here's the number that started it all. 10,000 tons. That's the largest single physical silver purchase in modern history, and it was all done in 1 week. Now, this wasn't some paper trade on an exchange. This was a direct off-market removal of a strategic asset from the entire global system. This wasn't a bet on price. It was an act of survival, of treasury preservation, on a scale we've just never seen before. So the question isn't what happened. We know what happened. The real question is why. And this is the crucial piece of intelligence. You see, sophisticated money always moves in silence. When a move this big happens off the books, away from the public eye, it's done for one reason: to prevent a panic. It's a quiet admission from the very top of the corporate world that the basic assumptions they've built their businesses on, well, they're not valid anymore. Our job is to understand what they now see so clearly. To be absolutely clear, this wasn't a bunch of speculators. This was a group of major industrial and technology firms, the very companies that are literally building our future. They went around the paper markets completely and took physical delivery right from the source. Look, that's the difference between betting on the price of something and securing the thing itself because your entire company can't run without it. It's a fundamental shift from speculation to survival. We have to make a really important distinction here. The noise is all the stuff you see in the media. The retail craziness, the social media fads, that's all a distraction. The signal, the real signal, is the quiet, methodical action of huge, informed corporations completely re-architecting their strategy. They are shifting away from paper promises and towards physical certainty. And that signal is all we're going to focus on. Now, this corporate pivot didn't happen in a vacuum. It's a direct, frankly logical, response to a new global reality. A reality where the defining feature isn't opportunity anymore, it's risk. It's systemic risk and a growing scarcity of essential things. To really get why they made this move, we have to first understand the world they're being forced to operate in. This quote really just nails it. This is so much more than a big purchase. It's the start of a trend where the literal building blocks of our modern economy are being bought up and locked down by private companies. They're basically creating their own strategic national reserves because they simply can't trust the global system to provide for them anymore. The future is now being tied to these private stockpiles. 3 massive forces came together to make this happen. First, you have persistent inflation, which is like an acid eating away at their cash reserves. Second, the world is fracturing geopolitically, turning reliable supply chains into massive liabilities. And third, you have these government-mandated green and tech revolutions creating a permanent, unstoppable demand for very specific materials. For any CEO, that's the perfect storm. This storm has completely shattered a business philosophy that's been dominant for 40 years. The whole just-in-time model, where you prioritize efficiency above everything, it's dead. It's been replaced by a much more defensive mindset, just in case. The number one job of management isn't about maximizing profits this quarter anymore. It's about guaranteeing survival, because the biggest risk isn't a bad earnings call, it's an empty warehouse that shuts down your entire operation. The core assumption of the global economy for decades, that resources would always be cheap, plentiful, and easy to get, that assumption is gone. It's invalid. The rules for corporate survival have been completely rewritten. From now on, a company's strength won't be measured by the cash on its balance sheet, but by the critical physical stuff it has locked away in its vault. All right, let's deconstruct their strategy. Pillar number 1 is what I call the production imperative. This is the simple, non-negotiable fact that without certain physical materials, those multi-billion-dollar factories that make everything in our modern world, they just stop. This isn't about finance. It's about physics. This forces them into a state of operational survival. It's that moment when a CEO realizes the biggest threat isn't a competitor. It's a supplier who can't deliver. At that point, the market price for critical material becomes almost meaningless. The only thing that matters is getting your hands on the physical unit to prevent a catastrophic shutdown. When that's your choice, believe me, price is no object. And the demand for this stuff, it's just relentless. The global push for solar panels alone eats up more than a fifth of the world's yearly silver supply. And that's before you even count the absolute must-have demand from electric cars, advanced computer chips, and 5G infrastructure. This demand is what we call inelastic. You can't substitute it, you can't put it off, it just has to be met. So, what's the real strategic takeaway here? It's that the world's most important manufacturing is being intentionally disconnected from the chaos of the open market. A company like an Apple or a Tesla can't afford to bet its future on hoping a delivery shows up on time. From now on, their production is directly tied to the physical assets they themselves control. This really connects the dots from one single commodity to, well, everything. This is about so much more than just gadgets. Silver is a critical, irreplaceable component in our entire economic and defense infrastructure. A shortage in this one area creates a vulnerability across our whole way of life, from your smartphone to our most advanced military systems. And if you think this is just some theory, we just had a dress rehearsal. The chip shortage in 2021 was the warning shot. This 10,000-ton purchase, that's the preparation for the main event, a projected silver bottleneck right around 2026. And this is all happening just as green energy mandates are set to get really aggressive, creating a collision of demand that the supply side is simply not ready for. The inevitable result is a conflict we've never really seen before, not just company versus company, but entire sectors of the global economy fighting each other. You'll have the green energy industry, the entire tech sector, and the defense complex all in a zero-sum war for the same limited pool of an irreplaceable physical resource. Now, the second pillar of their strategy is just as important as the first. This moves us out of the factory and into the corporate treasury. This is all about preserving capital. It's about using essential hard assets as a safe haven for the balance sheet, protecting it from the steady decay of our monetary system. We can call this financial fortification. It's the deliberate choice to swap a depreciating asset, which is cash, for a tangible asset that is both critical for your business and has historically held its value. It's a CFO's number one move to defend shareholder wealth from that silent tax we call inflation. Think about it. $1 billion in cash sitting on a balance sheet isn't an asset anymore. It's a liability. It's a melting ice cube of purchasing power. Even with moderate inflation, a company is losing tens of millions of dollars in real value every single year. In this world, the primary duty of a treasurer is to find a safe harbor for that capital, because just holding cash has become an unacceptable risk. You know, for those of you who follow high-level financial strategy, this logic should sound very familiar. It's the exact same thinking Michael Saylor used when he converted his company's treasury from dollars into Bitcoin. It's a simple, powerful trade. You get out of the depreciating asset you're forced to hold, and you get into a scarce asset that is absolutely essential to your future. And this isn't a theory. It's already happening. Tesla needs silver for every single car they make. So for them, holding the metal is a direct hedge against both shortages and rising costs. For a company like Apple, the math is even more critical. They have to protect themselves not just from a weak dollar, but from the huge geopolitical risk of having their supply chain so dependent on China, which, by the way, dominates silver refining. Let's be absolutely clear. This is not about speculating on commodity prices. This is a top-down, board-level decision to de-risk the entire company from the growing cracks in the global financial system. It's a vote of no confidence, not just in one currency, but in the entire financial architecture that has run the world for the last 50 years. Okay, now let's pull the lens back even further. Beyond the immediate corporate logic, there is a much deeper, more fundamental shift happening here. What if this isn't just about one commodity? What if this is the opening shot in a generational repricing between two worlds, the financial and the physical? This is really the ultimate question we need to be asking ourselves. Are we just looking at a bull market in silver, or are we witnessing the first real tremor of a massive revaluation of everything that is tangible and scarce versus everything that is abstract and abundant? A great rotation out of paper promises and into physical reality. What we're looking at here is a historic transfer of economic power. For the last 40 years, power has been held by those who could create and trade financial paper. We are now moving into an age where real, lasting power is shifting back to those who actually own and control physical resources, and the networks needed to move them. So the deepest signal from this 10,000-ton move is this: the physical world is fighting back against the financialized world. For decades, the cheap cost of real things has basically subsidized the insane growth of complex finance. Well, that subsidy is now being withdrawn, and power is flowing back to the source of all real value. And this power shift is going to completely redraw the geopolitical map. China's control over refining critical minerals gives it a terrifying chokehold on the global economy. At the same time, the countries that actually mine silver, Mexico, Peru, Chile, they're starting to realize the incredible leverage they now have. The idea of a resource cartel, a silver OPEC, is no longer some fringe theory. It's a real geopolitical possibility. Let's not mince words. The economic model that defined the last 50 years is over. The great repricing of the physical world against the paper world has already started. We are living through the end of an era that was built on an illusion of abundance, and the bill for that illusion is now coming due. So, we've decoded the signal, we've analyzed the macro environment, and we understand the corporate strategy. The final question, and it's the only one that really matters, is this: how do we take this intelligence and apply it to our own capital? What is our mandate in this new world? This right here is the key. The smartest corporations on the planet are no longer acting like companies. They are acting like sovereign nations. They're building up strategic reserves of critical materials, not for this quarter's profits, but for their long-term survival. They're building financial fortresses to withstand the storms that they see coming. And that is the single most valuable insight we can pull from all of this. The wisest thing you can do is to mirror the strategy of the most informed players on the board. You have to start looking at your own personal balance sheet as if it were its own sovereign entity. Your goal is no longer just growth, it's resilience, it's security, and it's independence from a system that is becoming more and more fragile. The framework for this is actually quite simple. First, you have to acknowledge the signal, accept that the rules have fundamentally changed. Second, you fortify your own balance sheet. You start that methodical process of moving out of depreciating financial assets into durable, tangible stores of value. And finally, you prioritize your own tangible sovereignty by owning assets that are outside the system and under your direct control. So I'll just leave you with one final question to think about. The biggest, richest, and best-informed organizations in the world are making a decisive move out of paper and into physical reality. In this great rotation, you have to decide: will you align your own wealth with theirs and own the tangible value they are now desperate to get their hands on? Or will you be the one left holding the paper promises they are so clearly running away from? Before we depart, remember, the financial landscape is constantly shifting. The insights shared in this explainer are for educational and informational purposes only. They do not constitute financial, investment, or legal advice. Every investor's situation is unique, and you should always consult with a certified professional before making any significant financial decisions. Our goal is to help you find the signal, but the final move is always yours. Stay sovereign, stay informed.